Reset. Take three. Hi, and welcome to the December 2023 Nanaimo single-family home real estate market update. As usual, I'm going to start with a review of the supply numbers. We're going to look at the demand side, and then we're going to look at the impact the supply and demand has on the market overall. At the end of the video, I'm going to touch on what I would be advising sellers that are thinking about making the decision around their home in the next 12 to 18 months. And then I'll give some thoughts if you're a buyer who's maybe thinking about getting into the market within that same time period. Let's start with the supply numbers. So supply 12 months to date, which I believe is the more relevant figure. The month over month stats can kind of have a little too much volatility. 12 months to date, our supply is down 22%. Okay, month over month are the same. In December 2022, we had 105 active listings. We had the same this month, but 12 months to date, we're down 22%. Active listings are down 8%. So in November, we had 280 active listings. This time last year, we had 302 active listings. So that's what's mitigating impact on the market right now is supply. Despite there being a reduction in trading volume, which I'm going to get to here in a second, we haven't seen that dramatic increase in supply. And I believe this is because nobody wants to requalify for a mortgage, so they're battening down the hatches and holding tight. And I think this is likely to be the trend into 2024, with the exception of those that maybe hit their peak affordability and are forced to market because we have a massive amount of mortgage renewals during 2024 and again in 2025. So on the demand side, this is where the big impact has been. And demand, we've actually seen total units sold 12 months to date is down about 10%. Total trading volume, so if we added up the dollar value of every sale over the last 12 months, that's down 17%. So there has been a dramatic reduction in the amount of trading going on to the tune of 10% in units, 17% in dollar volume. So what impact is this having? Average price has come down, but not as much as one might expect. You know, if you're talking to buyers out there, they're really looking for big opportunities, but because this supply has been throttled, we've only seen about a 10% reduction. In fact, as of the end of November, the total reduction in trading volume is only, or in average price, is only down about 8.5%. So it's actually come up. Last month, it was 10%. 12 months to date now, it's down 8.5%. So prices have come down, but not catastrophically. Okay, median price is sitting at $782,000. The average single-family home price in Nanaimo for a detached single-family home is $820,000. Okay, if you're in the market, you're trying to figure out what kind of discount you can expect. Now, when we talk averages, we're talking about 10,000 feet level. The average discount right now is minus 2%. This time last year, the average was actually plus 2%, with homes on average trading above their asking price. So a 4% difference there from where we were a year ago. So, yeah, you've got some negotiating leverage. We're certainly seeing people able to get, the good things like subjects and able to do an adequate amount of due diligence. But on average, we're only seeing about a 2% discount. So, if you're thinking you're likely to be able to go in and lowball or get a massive discount, that's going to depend on the specific motivations of the seller. Generally, right now in my practice, I'm seeing pretty balanced negotiating. So we're able to get a discount, but sellers also know that there's not a ton of other options out there at this point, and so they're able to hold somewhat firm to their asking price. Okay, days on market is actually where we've seen some of the most dramatic differential. We've seen a 63% increase in the amount of time it takes to get a home sold 12 months to date. Now, what does that translate to? Last year, the average amount of time it took to sell a single-family detached home in Nanaimo was 22 days, and that's gone up to 36 days. So a little over a month, still not a dramatic number. 36 days as an average days on market is still, a pretty low amount of time. We've seen this during my 16-year career. I've seen that get up closer to 50 days in 2012, 2013. So average days on market, 36 days. This certainly points to the fact that if you are on the market, when you hit around that 30-day point, depending on the showing volume, depending on the feedback, it's definitely a time to kind of reconsider your strategy and maybe look at your pricing or your marketing plan. Okay, I did a quick absorption rate analysis. Absorption rate analysis is where we try to figure out, are we in a buyer's market Are we in a seller's market? We look at the total inventory of a certain category of home. We look at the rate of sale and we figure out how many months of inventory there were. So in this case, I did 7 single family detached homes in Nanaimo between $750,000 and $1.2 million, which is where a lot of the trading activity is going on. Within that asset category, there's currently 148 active listings within that price category. In the last 6 months, there's been 232 sales in that price category, which equates to about 38.6 sales per month. If we do some quick math, that puts us as just under 4 months of inventory, 3.82. So what does that mean? That puts us actually at the high side of balanced, shifting into buyer's market territory. Now, it feels much more like a buyer's market out there, but because, as we already talked about, that relatively low inventory, we haven't seen that big increase in inventory. That's really keeping us from shifting into an aggressive buyer's market. An aggressive buyer's market would have been last experienced ending in about 2015. That period from 2010 to 2015 was an aggressive buyer's market. Okay, right now we're really not seeing it. It's slowly dipping into buyer's market territory, but not at the pace that we would expect to see dramatic decrease in prices. In order for us to see dramatic decreases in prices, we're going to have to see a dramatic increase in inventory. And I think, trading volume stays about where it is. Maybe inventory increases subtle as we get into Q1, Q2. It's going to be interesting to see what the appetite is for that new inventory that we know is coming. This is traditionally a low volume or a low inventory time of year. Most of my seller clients have decided to take their home off the market, wait until the new year. Let's shift now into what my advice is for sellers. If you're a seller right now, maybe you tested the market over the last few months, you weren't able to sell, maybe you're taking a break over Christmas, maybe you didn't even try at all and you're just heading into 2024 with the intention of selling into Q1 or Q2. We traditionally see the most amount of inventory in that May-June period, April, May, June. So one of the strategies that I work with a lot of my sellers on is getting into the early spring market. Early spring for us is like late February, March. Why is early spring an advantage? Because the buyers tend to show up in that late February, early March time period. Now, I know from experience when a buyer says they're going to enter the market and they might say they've got 3 to 6 months to buy, they typically buy within the first 2 to 3 months. So early spring, we have that increase in buyer activity that are anxious to buy. They're seeing the new inventory come on. They're committing to it. What happens as we get towards late spring, that May, June period, everyone takes longer than planned to get their home ready to go to market. So we see this increase in inventory in late spring when a lot of the early buyers have actually matched with the house and have taken themselves off the market because they purchased. And we don't see a big increase in buyers come late spring, but we do see an increase in sellers come late spring. So if you're a seller, I would say now's the time to start getting organized. This is a great time to bring someone like myself through your home for a free consultation. We'll help you point you in the right direction as to some of the things that you can do to guarantee your return when you are ready to go to market. And we can set that timeline to make sure that we take advantage of the market opportunity. Shifting now to buyers. Buyers have an interesting future in front of them where we have a pretty uncertain forecast. We know that once rates start to go down, we are going to see an increase in demand and we'll start to see sellers kind of trading again, because again, right now it's these high rates that are keeping sellers just staying put because they don't want to have to go through the requalification process. So the sweet spot, how do we time it to where we can get where there's the inventory rise, the downward pressure on pricing while rates are staying high? So what are we saying to our buyers? Get approved and look at short-term mortgages, 1-year terms, 2-year terms, maybe 3-year, but I'd be more focused on the 1 or 2 year because you're going to be paying a high rate, but you need to set yourself up to requalify as rates are going down. So if you're a buyer, we've been saying this for a few months now, be patient. Take this time to really calibrate your opinion of value by looking at properties, getting a keen sense of what you want. Do your due diligence. This is a time where you can be picky. Make sure you're getting out there. Make sure you're looking at lots of homes. Don't feel pressure to jump on the first opportunity, but know that there's unlikely to be dramatic downward pressure on pricing. The only thing that's going to happen for there to be more than the 10% we've already seen is to start to see these sellers right now that are in these variable rates that start to get under financial pressure where they're forced to market, and we start to see what we call motivated sellers on the market. Like, get me out from under this mortgage. I need to sell my house. I'm losing thousands of dollars a month. If you're out there right now, you're not going to find a lot of those. There's some people predicting that there might be some of them coming, but the numbers that we would need for it to have an impact, to have the downward pressure where you're going to get a substantial discount, it's just not, the numbers aren't pointing in that direction. So be discerning, take your time, but if you see a good opportunity, jump when you can, because those opportunities in a low inventory market can be very fleeting. That's the market update for December 2023. If you're a seller and you're looking to make a decision, I pride myself on doing free consultations. We are a no pressure. We're there to help you make good decisions, whether it's to stay put, whether it's to sell. You're never going to see us putting pressure on you to sell your property. We're there to help guide great decisions. If you're a buyer, same thing. We want to make sure you know exactly what you're doing, that you've got adequate time to do due diligence, and you're not feeling pressure. We are not a sales company. We are advisors. Okay, every one of our seller clients gets to work directly with me. You're not going to be handed off to an inexperienced team member. I do my seller consultations. I do buyer consultations. We're there. I've got 16 years experience. My entire goal is to get a clear picture of what's at stake for you, how we can guide you from where you are now to where you want to be. And I've got a great support team to help make sure that we can deliver value at the highest level. I'm John Cooper with the John Cooper Real Estate Group, eXp Realty, and we'll talk to you soon.